A new report shows that one group is cashing in big time as wildfire victims continue to wait for compensation. Jamali is a contributor for KQED's The California Report. Thanks for joining us.
Thanks for having me.
And you've been investigating this story, and you say Wall Street hedge funds are cashing out. Tell us about that.
Yeah, so we've spent the last couple of months looking at hundreds of securities filings that these hedge funds have to submit to federal regulators. And these filings really tell the story of the relationship between these hedge funds and PG&E before, during, and after the 2019-2020 bankruptcy of this utility. And what we see in these filings is that these hedge funds get really interested in PG&E right around the time of the 2017 North Bay fires. That's when PG&E shares were almost slashed in half. And then after that, about a year later, we see the 2018 Camp Fire tragedy hit Butte County in Paradise and Magalia. And at that point, PG&E shares hit record lows. They fall even lower when the company files for Chapter 11 a couple of weeks later. What these filings tell us is that, at that point, these hedge funds had a choice. And in some cases, they chose to get even further involved in PG&E as their initial investment had gone sour on them. And by doing that, by buying up even more shares, they're able to exert control over the company's board that is the body that appoints executives that run the company. And so we know that PG&E these hedge funds were in the room when PG&E strikes different settlements with various groups, including these 70,000 fire survivors that we have followed very closely. The outcome of that settlement has left these fire survivors holding almost a quarter, 24% of PG&E shares. And so as we're seeing these hedge funds cashing out, bailing out of their holdings in the company, that's going to have an impact on the compensation of these fire survivors because it puts downward pressure on the stock price. So this sell-off is one thing, but the impact on these fire survivors is what we've been tracking the most closely.
And we're talking a lot of PG&E stock, and some of these hedge funds didn't pay anything for it.
That's right. There was a historic arrangement made towards the end of this bankruptcy between PG&E and these hedge funds. And as PG&E was leaving Chapter 11, they needed to raise money. This is very common. One of the ways they do that is by selling shares. And so these hedge funds offered to basically be an insurance policy, a backup, or really what's called a backstop in Wall Street parlance, so that if nobody else wanted to buy these shares, they said that they would do it, albeit at a fixed, fairly low price, but they were there as a backup. Ultimately, they didn't end up really needing to step up at all. There was plenty of interest in PG&E stock, but nevertheless, they collected a historic fee of 169 million PG&E shares. No one has reported on this since the bankruptcy ended, but that amount of shares is worth $1.5 billion. There's never been a backstop of that size. And we did speak to the chairwoman, the former chairwoman of PG&E about this. She said, look, there's not a lot of entities out there that can cut a $9 billion check. And while that's true, I think the concern is that this arrangement may have been overly generous to the hedge funds.
And which hedge funds are we talking about here?
We looked at about 20 hedge funds, and they range from, very well-known players on Wall Street like Appaloosa, which was founded by investor David Tepper. If you flick on CNBC, you'll hear his name mentioned a couple times every hour, it seems like. He has sold off 80% of the Appaloosa stake in PG&E. We found 7 out of these 20 hedge funds that we looked at had completely sold off all of their shares. Another one that we looked at closely was Knighthead Capital Management, which is run by Tom Wagner. They have sold off more than half of their PG&E stake. And listen, they have a right to do that. They have, it's legal for them to sell off and move on to the next investment. We know, though, that these hedge funds have a short-term outlook. One of the things that's notable is that Tom Wagner of Knighthead Capital Management told Bloomberg TV last year when he was asked point blank, are the hedge funds going to bail out right away? And he said, no, that's not consistent with the way that these funds look at things like PG&E, look at these investments. But unfortunately, we have seen that come to pass. A number of the funds that we looked at, as I say, have completely bailed out. Others are fairly out the door. And again, that is going to have an impact on on the fortunes, on the compensation of these fire survivors.
Yeah, these fire survivors got millions of shares because of a legal settlement. So what happens now? Are they still going to get what they were promised?
Well, at this point, we are seeing a very recent surge in PG&E stock. It has been stuck in this range between $9 and $11 for most of the last year, but we have seen it surge a little bit in the last couple of weeks, which is a positive development for those fire survivors. But the concern here really is that, PG&E fire survivors of all the parties in this settlement probably could have used cash from what academics have told us, and certainly what many fire survivors have told us is their theory of the case here, that they could have used the cash a lot more than these hedge funds could have, that some of the insurance companies that ended up doing very well in this settlement process. And so, unfortunately, their compensation is now tethered to how the company that harmed them once, to how that company performs going forward. So even though we are seeing this recent surge, ultimately the $13.5 billion settlement that these victims were promised has never been worth that. And today, even with the stock doing fairly well, it's still more than $1 billion short.
Wow. And you say the actions of the hedge funds aren't just affecting wildfire survivors, but ratepayers as well.
That's right. We've been looking closely at the company's financial situation, and the company is more indebted than it's ever been. If you look at the before and after of the Chapter 11 process, PG&E almost doubled its debt load during that time. It's been out of bankruptcy for about 15 months or so, and that debt pile has grown even further. And this is happening at a time when PG&E really needs to be making investments in its system, upgrading its equipment, making sure it's all over vegetation management to make sure that trees and other vegetation don't come in contact with its equipment and cause more fires. That takes a lot of money. I mean, just look at the undergrounding announcement that was made this summer, just a couple days after the Dixie Fire, which PG&E is currently being investigated for. Their CEO got up and said that they were going to invest between $15 and $30 billion in undergrounding a fraction of its system as a safety measure. I mean, that right there, it gives anybody that hears it sticker shock. It's a lot of money, but it really speaks to the amount of investment that needs to happen. And it's hard to make those investments if you're as financially crippled as PG&E is right now. What we're looking at for ratepayers is a proposal by PG&E to hike up rates by 20%. That's a lot of money, but again, it speaks to someone has to pay for this, and ultimately a lot of it will be shouldered by ratepayers.
Yeah, it trickles down. Lily Jamali, following the money, thank you so much.
Thank you so much.
In an email to CBSN Bay Area, PG&E said, quote, "We empathize with the ongoing hardships many victims face and remain steadfast in our commitment to make it safe for our customers and communities. To deliver on this commitment, we are hardening our system, piloting new technologies, and taking other aggressive action to increase system safety. PG&E has funded the Fire Victims Trust as specified in the plan of reorganization and settlement agreed to with the Tort Claimants Committee and plaintiffs' attorneys representing an overwhelming majority of the individual fire victims. This plan, which included the agreed-upon terms of how the trust was to be funded, was confirmed by the bankruptcy court, approved by the California Public Utilities Commission, and accepted by more than 85% of fire victims who cast votes on it. All negotiated settlements of wildfire claims have been implemented as provided in the plan of reorganization. To be clear, PG&E does not have a role in reviewing claims or making payments to fire victims from the Fire Victim Trust.